Hello and welcome back for another episode of SPAC News. Today is Thursday, May 19th. I'm Tony and this is what I have for you today. I'll be taking a look at a new IPO, Metaverse Acquisition, and two liquidations, Cascade Acquisition and Omnichannel Acquisition. If you find any of the following information useful, hit that like button. If you would like to continue receiving SPAC news from this channel, make sure to subscribe. Give me your feedback on this video and the channel overall. I would love to hear from you. Just leave a comment below. Metaverse Acquisition filed with the SEC to raise up to $150 million in an initial public offering. This blank check company is targeting the Metaverse arena in North America, Europe, and Asia. The New York-based company plans to raise $500 million by offering 15 million units at $10 each. Each unit consisting of one share of common stock, a whole warrant exercisable at $11.50, and one right to receive 1/10 of a share upon completion of an initial business combination. At the proposed deal, Metaverse Acquisition will have a market value of $201 million. The company is led by co-CEO and director Aaron McDonald and Chris NC, also co-CEO and director. Founded in 2020, Metaverse Acquisition plans to list on the Nasdaq, although it has not yet chosen a ticker symbol and an IPO date has not yet been announced. They plan to target opportunities within the Metaverse universe, focusing on businesses with an enterprise value of at least $500 million. Alongside the Metaverse is a close relative, not mutually exclusive, which is the Cryptoverse. Now on to the liquidations. First up is Cascade Acquisition. Ticker symbol CAS, Cascade announced that it intends to dissolve and liquidate due to its inability to complete an initial business combination within the required time period. As a result, the SPAC will redeem all of its outstanding shares of Class A common stock that were included in the units issued in its IPO at a per share redemption price of approximately $10.10. Cascade expects to cease operation as of May 24th, and the public shares will be deemed canceled and will represent only the right to receive the redemption amount. Shareholders on record may redeem their shares for their pro rata portion of the proceeds of the trust account by delivering their public shares to Continental Stock Transfer and Trust Company. Additionally, the company's initial stockholders have waived their redemption rights with respect to its outstanding common stock issued prior to the IPO. There will be no redemption rights or liquidating distributions with respect to warrants which will expire worthless. Cascade raised $200 million in their IPO on November 19, 2020, but is the fifth SPAC to liquidate this year and is the first financial services-focused SPAC to do so. Although Cascade had 18 months on its transaction clock to complete a business transaction, the SPAC had the ability to auto-extend for 6 more months by contributing 10 cents per share to the trust, but chose to forego that option and liquidate instead. The second liquidation is Omnichannel Acquisition. Trading under the ticker symbol OCA, they announced Wednesday afternoon that it will be redeeming all of its outstanding shares of Class A common stock, effective as of the close of business on June 1, 2022, due to its inability to complete a business combination. As a result of this announcement, the SPAC will redeem all of its outstanding shares at a per share redemption price of approximately $10. Omnichannel has approximately $206 million left in its trust account, including just over $41,000 in interest and dividend income. In accordance with the terms of the related trust agreement, the company expects to retain the interest and dividend income to pay dissolution costs and expenses. Accordingly, there is expected to be a total of $206.5 million available for redemption of the 20,650,000 public shares outstanding, which results in a redemption price of $10 per share. Omnichannel, which raised $200 million in their IPO on November 19, 2020, had 18 months to complete a business transaction. This represents the sixth SPAC to liquidate this year, and the second SPAC on the same day, just moments after Cascade Acquisition made their announcement. As a background, Omnichannel originally announced a $1.03 billion combination with insurance technology company Kin Insurance. This occurred last summer on July 19th. Omnichannel expected to bring in approximately $207 million into the insurance deal from its current trust, along with $80 million in PIPE at $10 per share. But the deal was short-lived as it was terminated earlier this year on January 26th. At that time, Omnichannel cited unfavorable market conditions as the cause of the mutual termination, but hoped to turn back to the work of meeting with targets who would be able to benefit from their team of consumer founders and operators. But that also failed. Unfavorable market conditions, you think? And that wraps it up. I hope you found this information useful. Hit that like button, subscribe to continue receiving SPAC news from this channel. Till next time, later.